Stop what you're doing, because what just happened in the silver market is not normal, not historical, and not survivable for the system as we know it. This is not a rally. This is not a squeeze. This is not retail speculation. This is a bank-on-bank war, and it has already begun. In the first 48 hours of 2026, something extraordinary happened. Something that has never happened at this scale before. 17.23 million ounces of silver were demanded for physical delivery from the COMEX. Not paper, not futures rolled forward, not cash settlement, physical metal. Let that number sink in. That is roughly 2% of the entire world's annual mine production, demanded in just 2 days. This is not trading. This is a run on the vault. And when you understand who's doing the running and who is being forced to deliver, you realize the system has crossed a line it cannot uncross. Because this time, it isn't retail buyers versus banks. It's banks versus banks. The so-called gentleman's agreement is over. The pact to suppress silver quietly, cooperatively, and profitably has collapsed. What we're watching now is cannibalization. Let's break it down. On the delivery side, one name stands out, Deutsche Bank. Deutsche was forced to deliver 3.2 million ounces of physical silver. Not because they wanted to, because they had to. They were the victim, the forced seller, the bank that blinked. On the other side, two names, two predators, two institutions that understood exactly what was happening and moved first, JP Morgan, Citigroup. Together, they took delivery of 4.4 million ounces. They didn't hedge, they didn't roll, they didn't sell paper, they took metal. This is the most important shift in the silver market in decades, because JP Morgan has always been framed as the ultimate paper short, the suppressor, the manipulator, the villain. But that role just ended. JP Morgan didn't lose control. They changed sides. This is the flip. They are no longer betting against silver. They are converting fiat into atoms. And they're doing it before everyone else realizes the paper price is meaningless. Let's be absolutely clear about something. This is not about JP Morgan's solvency. The entire raid cost them roughly $314 million. That's pocket change. This is not desperation. This is strategy. When the smartest, most ruthless players in the system stop trusting paper claims, you should pay attention, because this is what happens right before a market breaks. Now let's look at what happened simultaneously in the retail market, because this is where the disconnect becomes undeniable. Major U.S. bullion dealers, gone. SD Bullion, sold out of American Silver Eagles. APMEX, sold out. Kitco, sold out. No restock dates, no guarantees. Weeks, maybe longer. And what is available? Coins with $18 to $25 premiums over spot. Silver trading at $71 on paper, but selling for $89, $92, $95 in the real world. That's not a premium. That's a signal flare. It's the market screaming that the price you see is not the price you pay. And this isn't just retail panic. This is supply chain failure. When mints stop shipping, when dealers can't source product, and when inventory visibility drops to zero, that's not demand surging. That's availability collapsing. Now let's go back to the COMEX, because the inventory numbers are even worse than the headlines. In just 24 hours, registered silver inventories fell by 2.8 million ounces. Registered metal is deliverable metal. It's the last line of defense. After that drop, total registered silver stood at roughly 39.4 million ounces. At the current rate of demand, that's 2.5 days of inventory. Let that sink in. 2.5 days. This is what systemic failure looks like before the headline event. And this isn't isolated to the US. This is global. Because on the same day, the Shanghai Futures Exchange lost 1.5 million ounces of silver, 46 tons, gone. This happened immediately after China's silver export ban went live. No delay. No adjustment period. No diplomacy. Metal disappeared. This is what happens when physical silver is officially weaponized. China cut off exports. Western vaults were already drained. And the remaining inventories, they're being vacuumed up, bank by bank, ton by ton. This is why the spot price is irrelevant. The chart is a distraction, a narrative tool, a psychological weapon. The real story is in the vaults, because the market has entered a phase where trust no longer exists. Banks don't trust each other. They don't trust settlement. They don't trust future delivery. So they're doing the only rational thing left. They're taking metal now, at any cost, before it's gone. And once that mindset takes hold, there is no price low enough to stop it. This is not 1980. This is not 2011. This is not retail mania. This is institutional fear. And institutional fear doesn't tweet. It doesn't hype. It doesn't explain itself. It acts quietly, aggressively, and early. What we are witnessing right now is the first visible crack in a system that was never designed to deliver this much metal. And the most dangerous part? This is only the opening salvo, because when banks start fighting each other for physical supply, There are no rules, no agreements, no alliances, only winners and losers, and silver just became the battlefield. Now here's the part most people still don't understand. This isn't just a shortage, it's a timing problem. Silver is disappearing faster than it can be replaced, and once that realization spreads, the move becomes non-linear, because silver is not gold. Gold has central banks, gold has decades of stockpiles, gold has a lender of last resort. Silver has none of that. Silver is consumed, burned into solar panels, embedded into EVs, locked into electronics. Once it's gone, it's gone. And that's why what happened this week matters so much. The banks know something most investors still don't. They know the flow has flipped. For decades, silver flowed into vaults. Now it only flows out. There is no return pipeline, no emergency reserve, no quiet shipment coming to save the system. That's why this moment feels chaotic, because it is. This is what a market looks like when it's discovering that supply was never there to begin with. Let's talk about leverage, because this is the silent killer. For every 1 ounce of physical silver, there are hundreds of paper claims, futures, ETFs, unallocated accounts, derivatives. This system only works as long as nobody asks for delivery. But now, delivery is the only thing that matters. And every single ounce that leaves a vault makes the remaining leverage worse. It's a shrinking denominator problem. And you cannot fix math with narratives. This is why you're seeing violent price smashes. Hundreds of thousands of contracts dumped in minutes. Billions of ounces of silver sold that don't exist. That's not confidence. That's panic suppression. It's an attempt to scare weak hands, to shake loose inventory, to delay the inevitable. But every smash accelerates the drain, because it convinces serious players that paper is unsafe. And when serious players stop playing paper, they take metal. That's the feedback loop. Paper selling, physical buying, price drops, inventory disappears, charts fall, premiums explode. Eventually, the paper market becomes irrelevant, because no one trusts it to deliver. We are closer to that moment than most people realize. Look at the behavior. Banks are no longer net sellers, they are net hoarders. Retail is locked out, dealers are empty, mints are silent. And sovereign players? They're gone from the public market entirely. China isn't trading silver, they're removing it. India isn't speculating, they're stockpiling it. This is not a financial trade, it's a strategic resource grab. And once silver is viewed through that lens, the old pricing model collapses, because strategic assets are not priced at marginal cost. They're priced at replacement impossibility. Ask yourself one question. If you were running a government, or a bank, or a $1 trillion industrial supply chain, would you rather hold dollars or metal you can't replace? That's the decision being made right now, quietly, aggressively, globally. And this is why waiting for confirmation is dangerous. By the time the headlines admit there's a shortage, there will be nothing left to buy. The people who win these transitions never wait for permission. They act when the system still pretends everything is normal. That window is closing. This isn't about price anymore, it's about access. You can't buy what doesn't exist. And soon, silver will be quoted, but not offered. This is how commodity crises end, not with explosions, but with silence. No offers, no inventory, no liquidity, just realization. The war is no longer retail versus banks. It's bank versus bank, nation versus nation, atom versus digit. And in that war, only one side survives. The side holding the metal. So don't watch the chart. Don't wait for dips. Don't believe reassurances. Watch the vaults, watch the inventories, watch the premiums, because those are telling you the truth. The silver market is not breaking. It is already broken. What comes next is repricing, violent, irreversible, and unforgiving to anyone still trusting paper promises. This is not hype, this is structure, and once structure fails, there is no going back.